Now, Singapore's trade numbers continued its downward streak in November as exports declined for the 9th straight month. According to data released on Tuesday, non-oil shipments were down 5.9% last month, following a revised 12.5% plunge in October. Electronics products were the main drag in November, with shipments falling a whopping 23.3%. But there's a silver lining to the gloomy numbers. Although electronic exports were much lower than a year ago, the value has improved recently. At $3.4 billion, November's figure was the highest in 10 months. And with us today to discuss this is Assistant Business Editor Joanna Seow. Hi Joanna, thanks for joining us. Now it actually seems like there is an improvement here. Why do you think that is?
Okay, well, hi, thanks Kimberly for having me. So the external trade figures for November don't look great on the surface because it's the 9th straight month of decline. But the declines have generally been getting smaller since June, apart from a blip in October when there was a spike. So demand for Singapore's products generally seem to be recovering. And also the figures are measured on, the headline figures are measured on a year-on-year basis. So if we look at what was happening a year ago, US President Donald Trump had been threatening additional tariffs on Chinese goods. So many companies might have been ordering products ahead of time to try and avoid incurring higher costs. So when you compare last month's figures to a year earlier, they definitely look lower. But that's because of this high base effect.
I see. When actually shipments for electronics fell, right? But for non-electronic exports, they actually grew at a 1.3%, coming off from the 11.2% decline in October. Let's talk a little bit about that.
Okay, so it's interesting because electronics exports have been getting a lot of attention because they tend to be more affected by the global trade tensions that have been going on. But I was speaking with UOB economist Barnabas Gunn earlier, and he was explaining that actually, as a share of total NODX, non-oil domestic exports, electronics actually only form about 20%, 20+%. So the greater proportion is actually made out of non-electronic exports, and they have been pulling up the overall figure. Such exports include like non-monetary gold and pharmaceuticals. They tend to be a bit more volatile as well.
I see. So what does this sort of slowdown in the decline mean for us exactly? Okay,
so analysts are saying that the contraction in exports has probably bottomed out, and things are expected to improve further going into next year. Yeah, especially as the US and China have recently agreed to a phase 1 trade deal. And the experts and Enterprise Singapore, which is the government agency that tracks the external trade data, they are forecasting that NODX growth next year will be positive or at least zero, which is an improvement from the expected overall fall of between minus 10% to minus 9.5% for this year.
I see.
And so, of course, positive growth in NODX next year will be good because Singapore is so reliant on exports for our economy.
I see. So hopefully that happens, but we'll see. And thanks for joining us today and sharing your insights with us, Joanna. And if you'd like to get stuck in with all the numbers and figures in the original article, do have a look at Joanna's article on straitstimes.com.